Good morning, everyone. Welcome to the morning meet of IndiaNivesh. This is Mehul Kothari from the research desk. Today is 19th Feb 2020. Yesterday it was an action-packed session on the D Street wherein we witnessed a tug of war between the bulls and the bears. Initially, Nifty started the session on a pessimistic note, following negative global cues. As the day progressed, Nifty took a dip of around 150 points from its previous close to reach near 11,900 mark. However, strong recovery in the final hour of the session helped the index recover from its losses and close near 12,000 mark. The market breadth yesterday also remained in the favor of declining counters, which indicates broad-based selling. It has been sixth trading session where we witnessed broad-based selling in the markets, but yesterday heavyweights recovered sharply. On the sectoral front, if we see Nifty IT, Nifty Media, other than that, none of the group indices displayed strength. Among the losers, Metal and Nifty Auto counters were the worst performers. If we look at the broader market indices like Mid Cap 100 and Small Cap 100, they ended with a loss of around 0.5 to 0.56% respectively. Now, yesterday the crucial low of 11,990 was broken, and the impact of that was seen because Nifty took a dip of around 90 odd points from there. But ultimately, it managed to close just an inch above 11,990. So we have a hammer formation on the daily chart. So this indicates possibility of some recovery in the markets. Even SGX Nifty indicates 40 to 50 points of upside during the opening. In such scenario, Nifty today can reach 12,080 to 12,100 odd levels, because 12,100 is a crucial resistance at least for the day. On the downside, support is at 11,950. So anywhere if index comes near 12,000 odd levels, one can look for intraday buy with a stop loss of 11,950. With regards to Bank Nifty, post our sell recommendation near to 31,450 odd levels, we witnessed a sell-off of around 1,200 points in Bank Nifty. Now, even in Bank Nifty, there is some exhaustion in intraday chart, so even that indicates some possibility of bounce. In such scenario, 31,000 to 31,250 will be a crucial resistance for coming few sessions for Bank Nifty. With regards to stocks, Siemens we are liking for a bounce of around 5.5 to 6%, so one can look forward to buy Siemens. Reliance is another counter which can show a bounce of around 2 to 3%. The upside target is somewhere near to 1520. Some bounce is expected in PSU banks also, because yesterday majority of the PSU banks which were trading with a deep cut ended near days high or on a comfortable level. So there could be some bounce in PSU banks also. ICICI is one weak counter. It's showing there is a breakdown in ICICI if it breaks 536. So one can sell this stock only below 536 with a stop of 555, because above 555 it will be again a breakout in ICICI and that too at an all-time high. So one should look to short ICICI Bank only below 536. That's it on the technical front. I'll hand it over to Mr. Dharmesh Kant.
Yeah, good morning all. Quick update on the global markets first. US market, traded opened with a negative bias, but it was a mixed trading session in the US because the technology index Nasdaq 100 was in green, and Apple is a part of Nasdaq 100. So after the guidance of Apple, where they revised it lower and they said they won't be able to meet the quarterly guidance for the Q1 of 2020. Still, the technology index managed to close in the green. However, Dow corrected around 0.5%, and this morning they are trading up 0.2 to 0.3%. Overall, Asian indices are trading with a tinge of green bias this morning, and things are being discounted in all the markets as far as the impact of coronavirus and the business impact on the different countries and the different companies are being taken into account. Back home, our market continues to have strong selling pressure, though the market recovered quite a bit from the morning lows, but it was selling yesterday, and a broad-based selling was seen across the counter in the cyclicals, and the beta counters were heavily beaten down. The worry remains the same. The earnings has not been able to meet the expectation, and every time it's the hope that the next quarter onwards the earnings will improve, and that is what is keeping the market jittery. And in spite of global tailwinds like oil prices being low, currency not flying off, still the struggle is there. I think today when the market opens gap up, it would be very critical for the market to close above that opening level for the day. If it is unable to do so, then I think this rally was short-lived. Whatever covering was there. in yesterday's trading session, and today gap up will be sold into. So any long-term call on a trading bet should be taken only towards the close of the trade rather than during the course of the day. Fundamentally, nothing more significant has come up. I mean, yesterday finance minister did brief the media, but it was more of a routine briefing on what they can do if to tackle coronavirus, which anyways has not impacted our country. Nothing major takeaway. The issue of telecommunication regarding payment of dues stand where it is, and at the same time, the news flows doing the rounds are not noteworthy. There has been rebalancing in the Nifty index. Yes Bank goes out of it. Series 7 enters the Nifty index. So some selling pressure from the ETF funds and the index-based funds you can see in Yes Bank to be there. And there has been an overall rebalancing in all the Nifty indexes bid, and the criteria for which the stocks will be included into them, that has also been changed quite a bit. So more of a rebalancing kind of an activity will be seen today in most of the mid and small cap stocks during the course of the day. That is all from our end. Have a nice day. Happy trading. Good day.